We're going to be continuing with the theme, transitioning to digital transformation. We're going to be talking a little bit about the real application of blockchain. So for it, I would like to introduce, I have Natalie Gil. She's a managing partner of Rational 7. Applause for Natalie.
Thank you.
Welcome.
Thank you.
Isabel Espina, Vice President of Enterprise Architecture at ADP. And Carlos Arena, he's head of America's Business Development, R3.
So thank you, everybody, for being here and for our wonderful guests, too. I want to make an introduction. We're going to have 3 different perspectives for blockchain. What we are not going to have is one perspective on the technical side. If you're expecting more explanation about how blockchain works, this is not the panel, but it's important for us to move in terms of projects, real projects, use cases, and initiatives that are, currently deploying and executing worldwide. So from my side, I'm Natalie Gil. I'm a partner on Rational 7. I run the blockchain practice. And I started on blockchain on the academic side when I was at MIT, and then I ran a number of projects I'm going to share after. And our guests, introduce them.
Good afternoon. I'm Isabel Espina. I'm Vice President of Enterprise Architecture for ADP. ADP provides services in human capital management, so everything from recruitment to retirement. And in the enterprise architecture space, we're responsible for understanding our business strategy and looking at all the external and internal disruptors and identifying what is our path from a technology perspective, and helping our applications build the next generation.
Hello, my name is Carlos Arena. I work in R3. R3 is enterprise software firm that focuses specifically on blockchain. Our company started as a consortium of regulated financial institutions that were trying to mutualize the cost of development of blockchain applications. By testing different platforms is that we identified that most of those platforms were not fit for purpose, and we created a new blockchain. That new blockchain is called Corda, and we focus on specific use cases for business. So we're looking not only on the blockchain piece, but also what is required for you to embed a blockchain application into enterprises in finance, but beyond finance too.
Cool. And let's start with Carlos about, first thing we want to share is about the motivation for blockchain on our company. So let's start with Carlos.
Yeah, our motivation started, so Satoshi Nakamoto's paper comes out in 2008. And from 2008 to 2015, each individual company was doing their own development, their own products. And blockchain requires a network. Blockchain requires the same application to be used by many. It's similar to a phone. A phone works, and I can show you that the phone works. But the phone by itself doesn't work. You need a phone line, you need other people to have phones, and you need to have and exchange phone numbers for us to actually use the phone. So I think there were 7 years of proving that the technology worked. The phone was there. But then it's an evolution for you to then expand into creating a network and begin to use a same application by several, and begin to use and reap the benefits of a community or a network that is actually leveraging the technology. So the motivation was, yes, prove the technology, but then move away from just proving it to actually create an ecosystem that uses that technology.
Great. And Isabel?
So for ADP, we're constantly looking at reimagining HCM, right? How can we make a better experience for our clients? How can we make things more seamless? How can we make our experience more intelligent? And in doing that, as I mentioned, we look at the digital disruptors like AI and blockchain being one of them. So for the past couple of years, we've been investigating. We started off almost like it seemed like a technology looking for a problem to solve and trying to figure out, does it make sense in our space? In many cases, you could solve it with different means. But we've found really 3 areas that we think that blockchain could be a viable solution. One is in the identity space. So ADP manages data about people, about workers, right? So we have a lot of identity data. We know, government registrations, we know how much you make, et cetera. So being part of a consortium of banks and being part of that identity provider is definitely an interesting use case and something that we've been looking at. The other one is in the aggregate networks. So the recruiting space is one. I don't know if when you all are trying to hire someone, we usually figure it takes at least 30 days in order to be able to onboard someone because of all the screening and the background check. And for a worker, obviously, I have to release a lot of information. It's a very analog and manual process. So that's one driver, is can we reduce that time? And the other driver is that the way of working is changing, right? The gig economy is disrupting how people work, right? It's not the traditional, you get one job, you work there for many years. Now in the millennials, the Gen Zs, right? The Uber drivers, right? People want like a diverse form of working. And that means that now imagine you have to prove your skills, your identity, et cetera, multiple times, and it creates tremendous friction. So we're looking at how could we, again, drive a consortium where the worker, the person, owns their data and is able to release that data in a validated, secure manner. Once, I establish that identity, I establish my credentials, my skills, et cetera, and now I can release it to a potential employer just in time. And I could bring with me things like my benefit preferences, right? I typically enroll in a PPO type benefits. I typically put my money in a direct deposit, right? And I use such and such bank. So I could now have my digital identity validated, verified, and bring with me to my next employment. So that's a space that we think is going to be disrupted by the way the workforce is changing. So we're looking at that very carefully and trying to champion that and get ahead of that. And then the third one, obviously ADP, the human capital management, the cornerstone is payroll. And people want to get paid in different ways. It's not the old school traditional of I get paid, I get a check once a week, twice a week, right? Now we're looking at constantly figuring out how much you're being paid, and I could pay you at the end of a shift, or I get paid at the end of a gig. So the ability to be able to move monies cross-border, right, for global workers and all. Again, that's sort of a blockchain type of technology where you don't have a middleman, is a very attractive one. So for us, those are the 3 main areas that we're currently looking to get ahead of.
Great. And, and for me, being a company that it's currently developing some implementation, and Carlos, and for myself, in the middle of the ecosystem, and probably you heard the past years about news about the cryptocurrencies, some implementations of blockchain, but there's this hype, and there's a lot of also scam on the initial coin offerings, and so reputation for blockchain. In some cases, went all the way to, this is more of cryptocurrency, dark things, money laundering, and a lot of stuff. So in my case, my mission, I've been an evangelist for blockchain. If we do have a technical forum, discuss about the technical things. If we have a more business forum, bring the word on how's the real application or not. Because right now, we'll share that after, there's a level of maturity to integrate blockchain with other applications that can be used right now, but probably because of the consortiums, it's not ready to do other stuff, more on the functional rather than the technical side. And so yes, so that's the idea. And also in my particular role, I help companies to, to start understanding on if they're more advanced into understanding, also shaping the use case to really get an implementation. Obviously, for all of us, it's important to say no when there's not a good use case for blockchain, right? We are, as you mentioned before, we are not looking for a problem to put my wonderful solution. So that's important too. I'm going to run through the use cases. In my particular case, I'm going to start. I've seen many universities are implementing. You mentioned some type of identity. I think you're going to mention that on the next example. But also we didn't mention that. But I also sometimes give a talk about the social impact for blockchain, because you have this decentralization and you empower other people or other organizations or consortiums that are not necessarily corporate, but you also can be empowered to do things among them, to make decisions, distributed decisions. So there's been a lot of talk about implementing things that are on the financial inclusion side, without any bank or any other centralized type of institution. So that's some of the works I'm doing also as part of the spin-off of the academic I did, and now with the Inter-American Development Bank. So that's one side, right? The other side, I think we're going to share some of the examples, the use cases, because that's you heard from them. They're very exciting.
Yeah, and one that gets me really, really excited about is on trade finance. So a lot of the problems with trade finance is for you to create a letter of credit, it takes you 20 days, 30 days to actually, prepare all the documentation that is required for you to have a letter of credit. And then one of the big problems about letters of credit is that once you have all the documentation, you spend 20 to 30 days, and then if something does happen, maybe the execution of that paper is not perfect. I.e., you cannot go to a judge and claim, a specific asset for that process that already took you 30 days. Trade finance is very revolvent, so it's quite quick, the cycle, and you want to get paid as soon as possible. So just spending 30 days creating a document that will give you the financing a little bit quicker, and then it's not necessarily the bulletproof that the bank requires to actually pay you early, it just creates a lot of friction. What we have done, and somebody mentioned that they were from Microsoft, we're working not only with Microsoft, but specifically with Dynamics 360, is embedding into cloud ERPs a working capital solution where the communication between the bank and the corporate is automatic, it's continuous, where the credit line of a bank is actually embedded into your ERP now, where you can have different eligibility as to what will be required for me to lend you money. So it might not be a letter of credit, a document that we need to go and stamp, but it might be, for example, an orchestration of a purchase order to be matched to an invoice, to be matched to logistics information, to make sure that my merchandise has already shipped, for example. So it's outside of my storage. So as a bank, I have much less risk because now, the process has already happened. But the communication is happening directly bank to corporate through the ERP. There's not a new portal that they need to log in. And also it's just a way for the bank that may think that I'm too risky. I'm able to prove to the bank that the transaction has taken place, the risk goes down, and I should be able, one, to get financing or get cheaper financing. And that is live, that is working, and it's no longer the back and forth that happens between the corporate and the bank. It's using my books and records as a source of truth for me to create this financing. So that one is really, really cool. The other one I would mention quickly is on international payments. We're working specifically with SWIFT. So again, we're looking for big networks, right? SWIFT has 15,000 banks that are incorporated into that. So tapping into those networks is quite important to actually scale and be able to get the ecosystem as quickly as possible, because to build it bank by bank, it would take many, many years.
Great. Isabel?
So another interesting use case that we're looking at is we do money movement. So obviously fraud is part of that, that process, ensuring that we're not moving monies to fraudulent accounts. And to do that, we participate in networks where we understand and share when we discover a fraudulent account. But that today, again, is not a real-time transaction. It's more of a batch type integration. So we imagine that moving into that, leveraging a technology, a distributed ledger type technology, would enable us to detect fraud faster, to communicate fraud more quickly to the community. So really, when we look at our different use cases, one of the challenges is adoption of the community, of the network, right? So in the financial industry, there's a lot of drive on money movement space that creates that community where you can leverage the technology. In some of the other cases that we're looking at, for instance, that recruitment space, it's much more challenging because getting adoption of, for instance, universities and learning institutions or organizations that certify a skill or licenses or whatnot, that is a much broader ecosystem, and creating a model where there's an incentive for them to participate is much more challenging. So those spaces, although very ripe for disruption, are ones that we see a longer tail to get there.
Great. And talking about the future, how do you see blockchain in, let's say, 5 years, evolving in terms of maturity or perception or real use cases? Let's go for Isabel.
So again, from our perspective, we still, especially in the use cases that we're trying to tackle, we think it's early days. Mm-hmm. And I think that for the next, say, 5 years, what I would imagine is that the underlying technology, I could see how it's going to evolve, and especially on security. I mean, blockchain inherently is very secure, but the layers on top of it is where it's been compromised. So I would imagine that security will be something that will mature to bring confidence into leveraging the technology. And I would imagine also a way to make adoption easier for the broad community. So I think that that's really where I see it going.
Great. Carlos?
Yeah, on my end, I think, there's many processes that are really, really inefficient that we are used to every single day. And just removing those processes is the exciting piece. It's less of a technology solution, but it's really that you can verify that your counterpart or all of us are processing information exactly the same way. It's just something that is quite powerful. So I think the sky's the limit as to what are the use cases. We know how painful it is to go through some reconciliation and validation that happens between 2 parties, 3 parties, or an entire auditorium. So changing processes, to me, is what truly excites me. And the other thing, I think, is also leveraging technology itself. So we're working specifically with Intel on SGX chips. It's a chip that actually it's very, it doesn't trust even the hardware where the chip is embedded. So it's a hardware solution where you can get results without the chip telling you what the inputs for that results happened. It's still in the early stages, but it's known as zero knowledge proof. Again, when someone is pregnant, something happened before they got pregnant. So it's this type of thing where you have a result without necessarily knowing what were the inputs for that result to happen, which will be incredibly powerful as we tend to trust in systems, and trusting into just a machine that will run code to give us a result will actually expand the potential applicability of the technology.
Good. And well, I see by being in many places talking about blockchain with communities and companies, that in 5 years, nobody's going to be talking about blockchain because it's going to be one more piece of your stack. Yep. So, and it's going to be like, using any other It's a combination of things that existed many, many years. Right now, they're putting in a way that we can really leverage a number of the functional benefits. But I see that awareness turning into, this is one piece, it's mature, we can use it for the right use cases. And also, I think just coming back to you mentioned Satoshi Nakamoto and the paper and everything, more of that stuff, because this guy, I don't know what you think about that he exists or who is this guy. But most of the stuff is, there's a lot of adoption on blockchain, a lot of people talking about that, and there's no an author to relate to. So that part is also disruptive because we are adopting something that we don't know who invented. Let's put it that way, right? So it's a little bit disruptive by itself, but also the idea of putting this together, and you see the Bitcoin, Bitcoin is everywhere, there's tons of nodes, it's run by a lot of people with different expectations, but it's there, and it's working. So that's also disruptive, right? So probably in 5 years, a number of the cultural changes of doing things together with the right incentives, I think they're going to be there. I'm going to add one question because we have we have a little bit more time of that. We were talking about the convergence between blockchain, IoT, AI, and a lot of the buzzwords. And we have different opinions. I want you to share that because I think people that really implemented that can tell you how do you combine those words? Let's start with Carlos. Yeah, he's talking.
Well, for us, we're very, very focused on the blockchain piece. And yes, the potential to embed additional technologies to a blockchain solution is there. But also, we want to be realistic. We want to drive an application into production to provide positive ROI. That's our goal. And just creating something that has the potential to be much grander might get some thoughts, but it would be harder to implement. Right now, we're stuck on security, on procurement, on many processes that go beyond blockchain, that just to expand that problem with other additional technologies would make it even harder. And our main goal is deployment, live applications, live solutions. Stop doing what you were doing. The process is old or inefficient. Let's move forward into a brand new product that I think, yes, using all the buzzwords to actually get a project done might get you there, but then once you begin the implementation and the integration into legacy systems and what really needs to happen for it to be embedded, it's better to just be very, very focused.
Isabel?
So I think for us, the first thing even with any of these technologies is to really understand your business and model those processes, and figure out how to streamline and improve them versus, leading with the technology, right? So I think that that's extremely important. But in looking at the various tools in the toolbox of, IoT, AI, blockchain, we do imagine, right? Because again, we're trying to, and a lot of the work that we do is in an innovation lab that ADP has is imagine, the IoT aspect of workers clocking in, and basically arriving at their, their corporate office. They've now clocked in. Now that calculating that payroll, and then taking the AI on top of it is very interesting to look at understanding these transactions and this network and determining patterns and insights, right? And driving almost how the network evolves, I think is a very interesting, although obviously creates a larger scope, but a very interesting use of all these emerging technologies together. So it's something that again, for us, still concept, but we do kick around of how these are complementary to create a greater capability.
Yeah, and that's important because there's a natural, it converges naturally, right? When it's ready, this is not ready, you can pull it to be ready, but as you mentioned, right, integration, if the process is not completely defined, I disagree a little bit, you can probably have some disruptive technology to change the way the things are done, but in most of the cases, that's not because you have already business processes. You need to have some ROI on what you need to do. Of course, the innovation labs or these sandboxes are super good to experiment. And we were talking about this because we need to keep that in mind, right? When there's the right time, it converges, it's ready. So we don't need to turn like, okay, it's not ready, I'll forget about that. But when it's ready, yeah, there's a combination of, on supply chain, we were talking about IoT, you know, to put that information on blockchain, traceability, a number of things. Those are things that, you know, probably are real today, so it can be used and leveraged right away. So one more thing. Can you share like one quick big challenge when you're leading these projects?
I'll start. I mean, the biggest challenge for us, again, is number one, identifying the business case, right? What is really the value? I mean, you know, as a technologist, we sit there and was like, this is amazing. Imagine what we can do. But okay, in this network, who's going to, you know, who's going to pay for this? Is this the consumer? Is it, you know, the participants in a network? What's the business model? So that's often the challenge in getting these things off the ground for us.
Because now you're peers, so there's no centralized
exactly.
like pay and.
So where's the incentive? Or often, you know, some of the thought process is, you know, we believe in this. This is give us a competitive advantage. Should we champion and almost like a lost leader, right? To pull in and create that network. So that's often the business side of the technology is where we, you know, struggle on what's the right answer.
And when you mentioned that, I thought of all the hypes we climbed already, like internet and other things, and adoption, and it's mainly the same, right? Sometimes I reuse slides from other disruptive technologies because on the, you know, adoption and pushing and, you know, informing everybody about what's going on is mainly the same. So yeah, those hypes, I think most of us probably had some, you know, type of pushing adoption of something. So techniques are mainly the same, Carlos. So.
I'll say on our end in regards to, so blockchain is a peer-to-peer, so you need to be open to whatever is happening on the outside. You need to, you know, push and absorb information. So security is really, really important, but also you need to be open. So it's a trade-off there as to how do you actually achieve that without breaking your security protocols. And we have worked a lot into what we call a firewall as to where the node sits, on which stage, and how the communication happens between the VM set and then where the node is, and how the communication can go back and forth. Because it poses a very important technological problem of, yeah, peer-to-peer, but then I have my own firewall, and I'm trying to restrict access to the outside world. So how do I achieve communication both back and forth without breaching my security protocols? Or more importantly, how do I get it approved through my security protocols to actually get it done and actually implemented? So that has been a very specific, not blockchain related, but very specific technology problem that we had to face and solve.
Great. Let's open for questions. I think we have some time for questions. Raise your hand if you want to make a question. There.
Hi, Emma Trejo Forjari from Bank of America. And I run the back office operation system. So the comment that you made around what you're looking to do with Swift was sounded quite appealing because, you know, as you know, we've had issues with Swift the past few years, right? And the latest one that I'm aware of was the Banco de Chile, where malware was introduced via vendor. And then you have situations where, like the Bank of Bangladesh, where malware was introduced through the infrastructure. So how have you given thought, how would you avoid that? Because effectively, that was not through Swift, but it was through some other weakness around. So have you thought about how would you manage that?
Yeah, and I'm glad you made that distinction, that it was not necessarily a Swift problem. It was actually the processes around Swift for those frauds to actually take place. One of the things that blockchain gives you is the auditability, much better auditability. So you actually have a history of every single change to a transaction. So it's easier for you to be able to trace what happened, for it to become now immutable into the blockchain and trace it back. So some of the problems, specifically in Bangladesh with SWIFT, was, in a way, SWIFT gets into processes where it's a black box and nobody knows what is truly happening. And here you would have much more traceability in regards to that. SWIFT itself, just based on the network, thought that the throughput of blockchains was not achievable for the number of transactions that they have to do. So for many, many years, they were reluctant to actually use blockchain, just specifically because they thought the throughput was not there for them to achieve. And it took us 2 years to actually work with them to actually get it done. It's not done. It's specifically Swift GPI. So it's also what product from Swift is the one that is being adopted or advanced. But yes, I can tell you a little bit more.
There was a question here, sorry.
Hello, my name is Antonio, Capital One. Recently, JP Morgan put an article that they've come up with their own cryptocurrency using blockchain. How do you think, as them being one of the larger banks in industry, doing this, and how is this going to change the landscape for blockchain and cryptocurrency in general?
So, if I heard the question correctly, you were talking about JP Morgan
Coin.
Okay. Well, we were talking about central banks, and we didn't talk about banks, but whenever you put some value, we were talking about also tokens and everything, but these values that, all the fiat currencies have their own, as the technology as well, all the fiat currencies, they also have this legacy, right? So you need to deal with a number of things, cash and everything. The fact that they're adopting coins or doing more of these digital assets is good, because they're leading adoption. They're saying, okay, this is safe. We're putting all together to be safe to adopt that. And I think not only JP Morgan, but there's other central, you were talking about the central banks, you were talking about central banks. That's also a sign that those things are getting mainstream. Sorry, Carlos.
Yeah, so we have been working with central banks on central bank digital currencies, which is creating a digital version of fiat currency, not a crypto, not something different, but creating a dollar, a crypto dollar, a crypto euro. Then you have banks that are creating, the JP Morgan coin is a little bit different. JP Morgan coin is only for JP Morgan account owners, so it's not even so far as a coin itself, it's almost debits and credits among JP Morgan accounts. So that's another extreme. And then there's others where they're creating depository receipts. So I, Carlos Arena, or I, Bank of America, or I, whoever, deposit in the central bank $1 million, create a token for that. The token is transferred among ourselves in a much more efficient way. And then whenever I actually need to get settlement and go to the central bank to actually claim that cash, there is that cash that was allocated for that token of whatever it was. So there's different ways to create. One, are you creating new money? What is the monetary impact of that? Or you just have a deposit of an asset, could be cash, that is, you're not creating new money. It's just a more efficient way of transferring the ownership of that. So there's different flavors and ways of designing it to actually make it work.
Cool. So, that's all from our side. Thank you so much to our panelists, and thank you.
Thank you.
Thank you.
Oh, we need to take a picture.